Okay, Saturday, Monday, Kev. It's just a little bit past my bedtime. Monday, December 12th, 2016. I'm going to run through iPath here. I just scanned for iPath. Now, what I want to point out is I have all this gobbledygook up here. All I'm trying to do is eyeball it when everything's kind of jammed together. I have RSI, MACD, money flow, unbalanced volume, and stochastics. These are common ones that people use, right? I'm looking for areas where they're kind of jammed together. Here, what I'm noticing, but Kev, we've heard this story since 2009 from all kinds of people. The trend is up in the market. I know. And didn't you say it's going to double? Yeah. But it becomes mechanical. All right. So what do we have? We have unbalanced volume is bouncing around on the bottom here. You can see that great wide swings on this thing, basically from 55 to 35. Now we have, if you look here, we're getting some divergence going on here, okay? So now here we are at, for those of you that buy 1,000 shares at a time or whatever, here's one of those deals where all of a sudden now you're looking at the range here is basically $1 and you're getting divergence going on here. This is going to be with stochastics and that. So what I'm getting at is that I talked in my previous video on treasuries, scan for treasury and stock, basically looking at TBT and TLT and that kind of thing. And what the nice broker dealers gave us to choose from when interest rates were at nearly zero. You know, hey, there's a heck of a bet, right? How much are they going to give the money away for free? I know that's the next step, but I think we're way past that. The deal is it becomes mechanical here. Is all of a sudden you have an area where it's kind of losing its momentum, and we're pausing here. Okay. For those of you this morning who woke up to the oil market thinking for sure we're off and running, opens at the high and sells off all day long, you can feel the same way about the stock market, but at the other end, oil runs up and you're giddy, stocks run up and you're like, BS, this is too far, too fast, whatever. Okay, basically we're betting on the hope there. Banks and stuff moved because interest rates moved, you know, and now we're going to see some heavy supply side spending going on. Right? One side we're spending, on the other side we're taking away here. The military contracts, you know, our country isn't as capitalistic. It's called a mixed economy, and we're pretty long in the tooth as an empire. And so we become a welfare state. What basically is that's why a lot of people are on disability because of robots are taking our jobs. And by the way, robots don't contribute to 401ks. So just a few other things down the road that we have to deal with, besides the fact we only create, 6,000 jobs a day, but 10,000 go on Social Security. You can find the tipping point on that one. But I won't go into it, right? So I'm not, hey, I voted for a third party. Okay. So, and I'm a libertarian. I don't care what you do. Just don't get it on me, you know. But one of these, what this one is, though, is this is midterm futures. So this basically isn't the front end. Okay. This is going out looking a few months down the road here. And what I'm seeing, I usually watch the money flow on the futures. You know, to have it go up, you have to have the money come in. If the money doesn't come in, price, in theory, it's going to wane. Okay. So here you have the midterm, which is kind of bouncing around down here. So basically, we'll say those in the know or whatever, kind of looking out a distance here, okay, into the first and second quarter and going, well, you know, maybe things aren't going to work out as planned here. We have interest rates moving up, which means that one column in our spreadsheet now actually has real numbers in it. And then we have the dollar, which is a bigger headache. Remind me I'm by myself. Remind Kevin here to show a yearly chart of Coca-Cola. Coca-Cola is kind of making a topping pattern on a yearly basis. It also did that in 1998, prior to the run-up of the little guys. Hey, we have little guys running, right? So Coca-Cola may be an indicator. Now, we know that at the ends of runs, things begin to get kind of zany. So like with interest rates coming off the high in 1980, we had to go negative to put in the top in bonds and the bottom in rates. So I basically kind of expect the same thing. That's what I was looking for. I was looking for some sort of decent pullback. It did happen in the Russell, but it didn't happen across the board. That would be the greed side of the marketplace. You know, waiting for the better price to buy for the macro cycle down the road here. We are in the build homes, lend and borrow and raise rates and let it feed on itself. Interest rates are going up, so we can put more money into the system and make more, and continue to do that until the Federal Reserve jams the economy, which takes about 3 years. So after the first hike, which would be late in 2018. So, but what I'm looking at right now is that it's mechanical, right? So I'm getting a little bit of divergence here. We traded lower, but we're getting kind of a hook. This is a daily, but the thing that caught my attention, I've been pointing this out a few times here, is that this is midterm. This isn't the front end. So this is people looking out, we'll say, into the second quarter, okay? And by then, of course, we could have 3 more rate hikes, you know, that kind of thing. That, you know, and it will, if you look at India or New Zealand, remember, you know, the United States is 19% of world GDP. Our banking is, you know, when things were bad, we opened the door to anybody who wanted the money, you know, and the only thing is they didn't want to be known that they were asking for the money. But that's how the capitalism works. We give the money to the banks. We assume in philosophy and that the humans are going to do a better job at picking and sorting how to hand out the money, and they hand out the money, and that's how that goes. But for right now, what I'm looking at here is that, you know, like I said, I'm looking at some divergence, and this one works out for you guys that buy 1,000 shares kind of thing. If we say this goes back to normality here, normal, you know, like this was an area, where are we at here? October, November, December, okay, first rate hike, it basically, what are we at? 40, low 40s, and zippity doodah up to the mid 50s. So we'll say 10, 12, 15 bucks. Came back down to the same area. This is post-Brexit. So this is when post-Brexit things were beginning to get a little frothy in the talk from the newbies. And I kind of said, that's enough for me. I'm going to kind of sit out the last 10% of the market here. I just kind of pulled a number, you know, large numbers, right? 10% sounds like a lot, but it's a little more work when something isn't priced $5 anymore. It's priced at $20, that kind of thing. So, but we're getting a little divergence here. Let's see. I guess I could mess around with this in a 2-hour. Let's see. What do we have the futures at? 25.50. Okay. So, all right. So this is kind of an easy one here. Is basically, it poked its head through here. You could do the same thing again, you know, set some alarms at 35 or 34.75, and you're trying to, here's the problem, of course, it's kind of like me and driving. It's not me I worry about, it's the other people. So the FOMC is one of those things. In my last video, I talked about don't press your hand for right now. You know, you may have bonds, you know, that were, you know, traded at 148. This bond futures all of a sudden start trading at 151, 153 and a half, 155. And it's not that everyone was like, hey, interest rates are going down. It's the world famous profit taking, or for the people who think that just because we raise interest rates, this will continue. I'm not saying it is, but it's just how the market's made up. And that's the nice thing about futures. It's a zero-sum game. If somebody loses $1,000, somebody has to gain $1,000. And basically, a lot of people are thinking that this is a sure thing. But remember that a lot of this is already factored in to the marketplace with bonds and stuff. But for right now, I'm just looking at this VXZ iPath. What do we have? Whopping 78,000 trade. It's been going the wrong way. Well, it's been actually doing correctly because the stock market's been only going up, and it chews up over time too. But like I said, we're on a daily basis, we're getting some divergence and things are beginning to stall, and this is a midterm one. So you may get a little extra movement. I mean, you can hold on to like some of the VIX products, all of a sudden, bing, bang, boom, it's over with. You go from 14 to 24 and it hasn't even been 8 days kind of deal. This one, you might get a little more oomph on it because it is a midterm where you can hold on a little bit longer. It's the people begin to start moving out on their options a little bit. But I just wanted to point that one out, and then we'll just run through them real quick. I just did the iPath thing because of some things I wanted to point out. Like in the last video, the broker dealers, they're not offering as much for those who play equity sides, Etns, of products to take advantage of the zero interest rates. And some that were out there, Deutsche Bank had some, they, kind of like those people that played UWTI. One day they're there and then they're gone. Same type of deal, right? When it was beginning to turn, they said, hey, we're going to take this off the board. And I'm like, you buggers. And, when you're at zero interest rates and they can only go up, right? In theory, they can only go up. They can't make any money out. They can, they can make it, but they just choose not to. But what I'm looking here is that on some of these, I'm going to expect a pullback on here. What we know is that with this volume, I know 23,000, but what I'm pointing out is you have something from July go from 10 to 20. So you have a double in 6 months, okay? This will only continue. But what I'm looking for is that we do set some sort of high in interest rates and then continue lower like we did here. Here's our first interest rate hike. And we continued lower into the real estate sales period here, right? Not too many homes are sold in December, and then we got through July. That would be perfect for the economy. Banks would have to fight each other on dropping rates. I heard on the AM radio on the way to Vegas that we're over 4% now. So they're going to, I'm sure they're going to try and push them back under 4 here. Okay. Some of us older ones remember double-digit rates. That's right, folks. You could go buy yourself a brand new home for 40 grand and 14%. But as interest rates go lower, your home goes up. And then the inevitable happens. You listen to people complain about property taxes and their insurance. It's like, hey, everything's relative. All right, so what I'm looking for is that we have the volume. It's taken off. We have the new president. This is what he's planning on doing. This is what the marketplace actually, we're already moving bonds and stuff in a hurry here. So what I'm looking for is that we know that the bodies are in here. The causation, we raise rates, this stuff should continue on. But I think that even if it's a spike, I think we're going to probably take out 3-4 weeks of this here. We need, right? The market's here to inflict pain. This would be a good place to start. This one's not bad. It's a 10-year. We saw that it doubled. So you're talking, depending upon, your kind of pockets things. What are we at under here? 18, 17, 16, 15, I don't think it'll get down that far, 14, but you have this is a 50 moving average. You might want to change it to 40. Hey, Kev. Hey, buddy. Yeah, you. Do it. Do it, Kev. Envelopes? No, simple. How about a 40? When I started in the business, it was 40, not 50. And 40 went along with uh, uh, 40 weeks, which is 200 days. So here's your 200-day moving average, and it's a lot easier just do the 40. What I like to do is kind of use use this as kind of a band. So I'd be looking to buy somewhere in this band in here. So between somewhere in the 16s, you know, we're going to give it a couple of more days here before we pull back, but I kind of poke in the band. You know, you basically have a double. This is only going to, we're going to continue to raise rates. We did that. We raised rates in 2004, 14 times in 17 months, if I remember correctly. So there's still a long ways to go before we run the economy into the recession. Yes. Same thing here. Long bear, blah, blah. I'm not sure if any of these are levered type deals, but like in here, 17, you know, so you're talking a 15% drop here, you know, and like I said, it just has to be spiky. 23,000 in volume. You know, nobody wants to play these things. It's kind of like, you know, if they don't pay a dividend, you know, you still have to attract people to these. More than likely, if there is a pullback, people are going to go into utilities because utility yield competes with these products if you're not playing the futures. Like I said in the last video, for the futures players like bonds, buy on the evens, 148, 146, sell on the odds, you know, 149, 151, well, I'd wait for 150, 153, 55, that kind of thing. And also remember, you may want to start watching June, that type of thing. So here you have, what do we have here? 21 to the 17 area. So, you know, a 15% drop, you know, that kind of thing is, that would inflict some pain and cause people to, you're basically buying, you know, you're buying the dip here. But I like I said, I'm, you know, set some sort of high in here and then pull back over the summer. I posted, I think on Saturday or Sunday, the meetings for the Fed. Remember, history has shown in the past that the Fed could come in between meetings and mess with the market. I'm going to assume that we're going to have an interesting time between the Federal Reserve and the executive, the executive side of things at the White House here. So it's like I said, it's going to be an interesting 4 years here. The copper type deal, we did get some rollover here. This now may be beginning to act with interest rates, just like with natural gas. We had a hard move off here, and we're, you know, it's poked up a couple of times, but we may have it where it drops back down in here too. Like I said, as the dollar goes higher, it's going to make it difficult for exports for our products. Here's a 5-year. See, I mean, you have a product go 22 to 30. You know, what is that? 50%, and you can't even get any volume out of this thing. Some of these are going to go off the board. You know, I mean, you know, we had an opportunity. Here's gas. Okay, read your prospectuses on these. I played this one. I was only looking for to 61. Okay, so we zipped above it on here. Got the double top going on here. But what kind of drew me to it, not that it was in pennies here, percentage, was that it kind of held its own versus UGAS and DGAS. It's not levered, okay, but you know, 40 to 60 is, I'll take it. There's not a lot of volume in here too, so for some of you, we're going to put 10,000 shares on here. you're gonna have to work a system on here, kind of deal. So once again, I have a larger sideways pattern on here. Here was the December low, or here's March low. Here's December. Okay, but the deal is that like I said, read your prospectus. It's you throw a couple bucks at it. It's on your screen. You're watching it, kind of thing. Actually, let me do this here. I'm not sure how high is high on here. Okay, that's not too bad then. Because if there isn't, okay, here's a weekly. So, all right, I don't recommend anything, but it's one of these things, it seems to be holding okay on its own for what we've had going on. It doesn't say it's levered. Sub-index total return here, no dividend yield, blah, 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 yada, yada, yada. But the deal is it's, depending upon, who you are and whatever, you can, splash some on here. Obviously, this is in the past. 2012 was a low. So we had contango through here. So backwardation, when did we have a period of backwardation? How far back do you go? Not far enough. Oh, you do. Okay. All right. I'll have to read my prospectus. That's one of those things. All I know is I saw one thing that came through that said if it drops down to 20 cents or something, they're taking it off the board. But this was part of the other angle, I think, was to watch this in relationship to D-gas and U-gas, because I think what it was holding its own, and, for some of you, 50% in a month, whatever, 2 months, whatever. Some of you, you're not happy with that either. But I think that's what it was. I'll have to go and take an eyeball on this here to see if we can get it back up to $3 here. Yeah, there you go, Kevin on the fly. It's one of those. It's like, well, it's not going to cost me much. It's splashed on the screen. It's it's kind of like you get a quote. You kind of. What I'm looking for and stuff like that is what's going on with the volume. You have the one guy wrote in the chat rooms, the biggest volume spike that he'd ever seen. So it's like, well, there's a telltale sign that you have people getting in and people getting out. But it's like, okay, you've made it this far. I was, like I said, that was my plan. Now, even with today's pullback, it's actually holding above where I sold it at. Right? Or did they get 64? Whatever. 41.4 to 60, whatever. But even after, you know what I'm saying? It's one of those that there may be a look for 60 cents. It's worth my time to eyeball this thing to see if I see anything, because that's what I'm looking for. It's I'm no longer on the floor in the office. It's kind of like you're a broker and all day long everybody wants to buy something and you're like, well, judging your account and you and everybody else, I don't think you should do that. But each their own. Okay, nickel type stuff. That one looks to be kind of waning a little bit. 1400. I just wanted to run through these real quick. I do have Hike and Ashy on here, so this does kind of lean towards the bullish side. After oils today, oil needs to hold 52. We're at 52.65. We're now down another 20 cents. I got a sneaky feeling that these guys all sold forward futures contracts, and that these, that's just OPEC. America gets 40% of its oil from Canada. We're going to turn on the spigots again kind of deal. I think that everyone, let's just say all of those in the know, they all hedged, and now they can just pump. Stronger dollar means eventually we'll be importing more oil than producing it. They're going to have to play the same game again, right? we can turn them on a lot quicker now than we did back in the late 70s or in the 50s, right? There's a cycle. We did the pumping thing in the late 50s. We did the pumping thing in the late 70s. We did the pumping thing in the aughts. So technology and everything, we can get them back online a little quicker than what we used to. But the territory still sucks. Most millionaires per capita, North Dakota. What? That's right. If you want to hang out with millionaires, just move yourself to North Dakota. Yeah, but that was when we didn't have billionaires yet. Oh, there's a quick tangent for you. So I'm over at the college, right? I live in a town of 50,000, and I thought, well, I'll set up shop and put a shingle out and hire people and take my entrepreneurial talent. And I found out that since the stock market opens up at 6:30 and the bond market opens up at 5:20, this is, of course, in the AM. I told them they could show up at 4:20. Guess what? Not too many 20-somethings want to come and show up at 4 in the morning. But the thing is what I learned, I had one kid, Mr. Glossier, who would stroll into a math class, and, he fit the suit type, So what do you want to be when you grow up? I want to be a banker. And I said, why? And he goes, I want to be a millionaire. And I thought to myself, hold on a second. Oh, a millionaire. I go, hold on a second. That won't even get you to the Forbes 400. And he goes, what's that? And I'm like, okay, I'm in trouble here. I moved to this lovely place because a sight unseen, and the sun comes out every day. I spent my time in a suit in a skyscraper, and they stared out the window and watched beautiful Midwest summer days. And then Saturday would roll around and it would rain and I'd still have to mow, kind of thing. Mowing's nice because it gives you 90 minutes to think. The phone doesn't ring. It's loud. No one wants to be around, I have time to think. So I thought, okay. And then the worst was in the wintertime. You get on the bus to go downtown, it's dark. And you get off, the market closes at, 3:50. And you fumble around, do your paperwork. And then it's 5:30. You get on the bus, it's dark. And this goes on for months. And I'm like, I have to do this forever. But I ended up down here, sight unseen. The sun comes out all the time. It's kind of nice, but when things rolled over, and I learned something, I lived in big city all my life, and get to 50,000 with one road in and out. I learned something about elasticity with California, and I learned that I ended up in the 5th worst metropolitan area in the country. And I'm like, no kidding. Arizona, the Mississippi of the Southwest. And I'll leave it at that. So back to the marketplace. So the kid. So then I thought to myself, I said, Forbes 400, he won't get it. So then I realized, okay, this is what I need to do. Grandkids, great grandkids. When they say that they want to be millionaires, you know how capitalism works. Start them young with the TV, you tell them, no, they want to be a billionaire because inevitably, to be the 1% kind of thing, or the 10th of 1%, or the 100th of 1%, there's only a few of you, right? So statistically, blah, blah, blah. So, but if you tell them to be a billionaire and they stall out at, say, 190 million, you still love them just as much, So that's what I learned from the kid, and that's what I hate about the East Coast. You want to go to dinner? It's like 11 at night. London's, it's the early bird and the worm thing, The East Coast or the West Coast it's when you get older, it's a lot easier to get out of bed at 3:30. And Hawaii is a different thing. I'm going to watch Monday Night Football. Oh, that was a great game. Oh, what? It's only lunchtime and it's over. All right. So back on track here. So it looks like aluminum's still going here. So I did look at like what CENX. That was kind of some of these. I think we're probably going to get a shakeout here with the interest rate deal, but that'll allow people to get back in. We talked about the crude oil and stuff. These Heiken Ashy bars you know, this does look like a setup that's going to continue higher, but I do not like what happened in today's trade, where we opened at the high and sold off after an extended run. So I'm going to say that the 54 in oil is going to cap it. Now, if oil goes back below 52, it'll probably go back into the sideways band again. See how we'll just say broke out here, sideways band. Would probably work our way towards the other end, but stalling somewhere halfway on here. What is this? 580, 640, I guess that's a decent percentage. It would have to go back into the lower bands, we'd have to clear through 580, but I think after this morning's selling 54 is probably going to cap this for a while. On oil. That is on West Texas. Brent is a little bit different. The money was in West Texas. The money did flow in there, but the money didn't show up in Brent. This would be wheat. I did a video talking about wheat, possibility of it turning. Another one of those buy and close your eyes type deal. I did a little reading of some farmer stuff, and they were talking about biting the bullet and selling off what they had left. The participants are slanted, and then, of course, 10 more pages into the guy's report, areas that are in drought in the wintertime, which is basically what winter is a drought. And I thought, well, hold on a second here. We're in a drought situation. You know, will that carry over to the spring? Whatever. They're just depressed. Wheat prices have been going down for an extended period of time, but the wheat thing, I tried, you know, I wanted something more like 360, you know, 340, 320. But that might not happen. I also have to remind Kevin that, Kevin, you're mentioning numbers that were numbers, you know, price has memory. You know, I talk about $3.50 silver and $5 silver. But I have to remind myself that when I talk about this stuff, when I was a broker, the bestest, you know, Iowa could do is 120 bushel for corn. You know, there were a couple places that shot over 200, but they were on rivers kind of deal. They had natural irrigation. And also, I think we had like a couple of billion people less. So some of my numbers, I did mention some years ago about prices of you know, cows and wheat and corn and stuff back in the 50s and then 60s. And then we had the inflation range of the 70s, strong dollar in the 80s, and depressed prices back to those levels, but not levels seen prior to the 60s. So it's kind of like, you know, we won't find too many more $40,000 homes kind of thing. The inflation's in there. And so when I say, well, I'd like to get under 4, we might not go below 4 for a while. Kind of, there's a natural, you know, it works out. It's like candy bars. I remember when I was a kid, and you could get 4 candy bars for $1. And then we had 1980 roll around, and then it was 3. And then now, now it's, you know, it's 1, which is fine, right? You know, candy bars. Oh. One of the last few things that haven't been muckied with ice cream and that, you know, what are these, you know, why can't they just make it straight up milk and cream and stuff? Okay. 2-year DTUS. Okay, I talked about these before. We're down at 26. We're up to 32. This is the front end when we raise interest rates. Wow, whopping for, you know, you get something that goes from 26 to 32, and what is that? 50%? 26. Do your math again, Kev. 6 of this. Okay, whatever. You get this, and nobody's interested. And when we continue to raise rates, it's going to be on the front end. So this will only continue higher. So here, this one you could probably play, you know, that's a little close. I don't know, 30.75, 29.75, that kind of thing. Get back in there. And then trust me, like I said before, right? We raised interest rates 14 times over 17 months. So we're going to have, they're going to price this, you know, it can only go up, you know, asterisk, you know, the volumes here So this was them buying in prior to the pause. This was the pause before it broke out. So I'd gobble some up on here on a pullback. And then you'll be fighting with yourself here though with 47,000 in volume. Cotton, tooth at 2,500. I'll pass on that though. Cotton, the choppy thing is kind of like a double correction type here. It's not really clear cut. Something like the sideways. It is a sideways slant to up. So the whole thing here has been going up for 9 months. So if it's up here, you buy. If it's down here, you sell, kind of thing. Cotton, same type of deal. Same thing as cotton. What do we have here? Broad commodity. I'll pass on that one. Total return here on commodities. Looks like it's weighted with oil. We have some volume, but we're only moving in dimes. I sorted these by the amount of return that they've had. Cow, okay, this brings me to cows. Livestock, all right, there is a seasonal in January. I'm a little late on this one here. Typically, farmers would sell their pigs and stuff in October to go into the fields. Okay, so that was the low. The deal here is that you had your move off of it. Probably get a pullback on here for January. It does move in dollars, okay? And so the swing would be back up into here of the 24, 25 area, 63,000 in volume. But the deal is it's, you get a move up and then you get some sideways action. You can accumulate, and then you're looking for a January swing. I don't know if you're interested in having something go from 19 to 23, $4. What is that? 20%. You're into 20% in 2 months. I'm not saying it's going to happen. I'm just going to say that there's an underlying deal where hog or cattle prices actually move up. I think there's a pure one. Yeah, that's cow, right? Cow. This one I just tweeted out here, JJG, wow, 32,000, but it's setting up, quietly. It's like a coil tightening, kind of like this type of thing here. Sideways pattern. When you have sideways pattern, it's going to either break out higher or lower. That's the deal here. And so here it went from 30 to 37. So that's 20% in a couple of months. Basically the same type of deal, but this has been going down precipitously for a long time. How far am I to the bottom? Dirt 2. Okay, page 2. How about this, Kev? Okay, so here we go, and I'm going to change the to all of them. This is why I like weekly. This is the other reason why I like commodities. Commodities futures don't go to zero. Asbestos is still being traded in Russia. Hallelujah. All right, so in commodity cycle, there's a drought every 4 years and coincides with the hard freeze kind of thing, i.e. natural gas. The drought, what usually happens is you have 3 good years. What do we have here? 2012. So 1 year, 2 year, 3 year, 4 years. Here we are. Shh, 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 shh. Quiet. So what do we have going on here? This is the last swing from 40 to 64, so this is 50%. Okay. All right. So what do we have here? We have 29. These are your targets, probably up in here to 40. So you're taking a $30 stock and making $10 on it. I'm not saying it's going to happen. All I'm saying is that it stopped falling, right? And we're basically doing the sideways thing. So what you do is, what you do is you just start accumulating, okay? Go back further, Kev. See if we have an accumulation period before we had the run up. Well, here we go. Okay. All right, so we have this is a drought year here. So here's in the 70s, okay? All right, then it collapsed. Basically went sideways for a couple of years. So what do we have here? 1, 2 years, and it took off again. A lot of this is going to be because of people remembered this. That's what happens. But after this, you think anybody remembers this? No. That's it's been almost a decade. You think, okay, so this is the type of thing that gets my attention. It stopped new low. It's going sideways. The volume, it's light. But here's the you can, to me, anything buying under 30 is a good deal. Here's 26. You know what I'm saying? So the deal, what you do is you accumulate. Your first target is 40. No options. Options. Wow, that's going to be even thinner. And then of course, then you start swinging it. What is that? 20%. So 20% is 36. I get a little bit more. Okay, so a little bit more on the upper end here, $9, 30%. So here's 30%. What do we have here? 30 to, what's this over here? 66. So it's a little more than 100%. So that's this is a drought situation. So this is the thing. This is what I'm looking for, like in futures. You get this and extended this months, nothing. You get this and then you get the swing higher. So, you can get your feet wet in the JJG. What do we have on a 2-hour? Like I said, read your prospectus. Okay, bunch of sideways there. So we're back to the daily where it's coiling. Yeah, coiling, basically coiling. So that's one of them there. So there's that. Now remember, and also I mentioned for those that do have access to futures, there are those mini contracts, the XK, XW, and XC, corn, wheat, and beans. I'm slanted towards wheat right now. Then I'd go corn, and then beans. I like the short side, soybean meal type of thing. Oil still on the downs, you still have to, to get the soybean oil, you have to crush it. You end up with meal for byproduct, so, if oil starts taking off, they start pounding beans, or crushing them. That's the term, crush the beans to get to the oil. And then you have the excess meal. So you could have something where you buy oil and sell meal kind of thing. What do we have here? This one's moved off the bottom and sideways here too. 30 from 20. PETN 25,000. I'll pass on this one here. Ooh, pull back. Okay, here's sugar. All right. So here we have, there's nothing on here, but we'll just look at the chart here. Sugar is down. We get a bounce from 17 to 36. So we get a double. These are weekly charts. So, say you get a one move, 1, 2, 3, 4, 5. This will say is wave 3. Here's wave 4, 30. Okay, so here you'd want to go out to your sugar contracts. Don't forget about South America here. That's the deal with soybeans is if South America crop is good, then beans will come down kind of thing. But that's how I look at it is, here you have an opportunity here with sugar. The next swing higher, if it does, the angle of ascent will be sharper. Okay. Same, if sugar's moving, kind of like orange juice, the whole South America thing, moved up, beans moved up, sugar moved up, and orange juice moved up. So it's definitely some South America thing. Because what I saw in the Midwest, we had copious amounts of precip, Treasury flattener. Yeah, we're definitely flattening that. I'll pass on that one. VXY, this is the one we talked about before, right? This one's dynamics. XVZ, okay. Too many acronyms. All right, so this is a dynamic one. That one has that kind of hook thing to it here. What do we have going on? 2,700. All right, here you go, guys. We have 2 years of sideways action here. If this thing floats, well, that's the first problem. If the market goes up, these products don't work, right? The first thing is you have to have the right product here, and in bull markets, it's XIV. I had an opportunity of buying that under $5 XIV. So the next time we crater, which we do cyclic, or yeah, we used to do the business cycle every 4 years. We're actually able to stretch it out a little bit longer. This one is comparable to the 1930s and stuff. Our Great Recession looked pretty much like a Great Depression in my eyes. You know, we tortured the middle class and the baby boom. It was awful for a large segment of the, you know. I won't go into that though. Just add another line to my paycheck and put it down as national health care. I don't care. I don't care, you know. Whatever, right? You know. All right. So, okay, so what do we have here? 2011, 12, 13, 14. Okay, so this is the bottom. Okay, yeah, this is the drop in stocks, and this has been the run up in equities, and here we are. If this thing, well, each their own. You know, this is why I stick with futures. These are derivatives. You know, when they talk about, you know, 600 trillion worth of derivatives out there, this is one of them. You know what I'm saying? And now, like with my Deutsche Bank one, I had some of these that were recalled or redeemed. The broker said nothing. I had to go to the middleman, or my middleman was taking care of it, and on some of them, but then the Deutsche Bank ones, they're just sitting there kind of thing. And I'm like, hey, you are, where's the transfer agent and stuff and all of this? I know I'm a self-serve guy, but don't you have some fiduciary responsibility to this thing here? I know that they're not FIDC or SIPC and stuff, but which of course gets into another thing too, is that a lot of these products that we just love to trade, they're not insured. Back it up. Hold on a second. Do you mean that thing that I own that says whoops, I better not do that either. Yeah, that's right. They're not insured. Yep. So yeah, so like I said, read your prospectus, which was laying exactly next to your stock certificate that came in the mail, right? Times a changing. All right, sugar sub index. Oh yeah, I looked at this one. This one had some volume. Wow, 21,000. But we're back, you know, moving averages type of deal. Here's that band I was telling you about, 42, 55. That's $12. That works for Kevy. You know, what happens if it comes down? Well, you saw that this was an area once before that people said, hey, I need to, you know, I'm interested in it. So what do we have? $7 lower and then $12 higher. If it goes 7, then you have 20. Look at it that way. Cafe. I'm not quite sure why the story was that this one was down, but Joe was up today. So you got me on to that one. Let's do it. Yeah. But this was a coffee. I talked about, you know, yeah, what's this here? 13.27, so that's a double over a year here. So you have a thing where you have a larger sideways pattern here. That's why I kind of looked at the coffee. And these aren't weekly, so it's like, okay, what, you know, we're coming off of way up here, and now we're, you know, found a bottom, you know. Maybe we find another bottom here and actually turn this back up here. I know for recent trading action in the last couple of months, having something go from 13 to 27 in a couple of quarters doesn't seem like a lot, but let me kind of pull you back down to earth. You know, if you're making 3% a month, here's 100 billion. You know what I'm saying? You know, let's just pull you back down to, you know, people chasing it. Oh, this thing's up 40%, and now you're jumping in it. Okay, so here's India. I think we have a bear flag going on here. So a lot of these other countries, remember, 95% of the world is over there. India, if they're having issues, you know, if they're not selling homes still at 12% interest, they gave a discount if you're a woman, a quarter point. I think it was 11 and a half, 11 and a quarter. If India's faltering, that's just a few people who won't be buying stuff. what other country, like New Zealand, you know, just start rattling them off. Today I talked about putting back BZQ on and Yang, and went after Russ today, RUS. I've been going after Russ for a couple of weeks there. Averaging down. The angle on the Russ one was basically the oil deal. For me to, you know, it's amazing how you buy 3 weeks ago at say 9, then it's 7, you buy again, and then all of a sudden you go, we're at 54, and you're like, oh, that's a resistance area. I will buy Russ, you know, just due to the fact that, you know, how oil, you just know it, that the herd went running into oil thinking that this is going to stick, and it just went against them all day long, you know. iPath, okay, this is the one, Vizia, that we talked about. It looks, well, but then again, you know, this is where it was before, you know, and we're working here, but this is the midterm, you know, this is the middle area, and this is a weekly. It still looks pretty ugly. I think, you know, stochastics and everything are pretty buried. Like I said, I'm not saying it's just going to turn today, but there is divergence. So if you're a computer that says, hey, I'm looking for divergence, it's going to start triggering stuff. That's how that works. And you shouldn't be on here. Except for you are a sideways. That's what I hate about equities. Oh, it's sideways, Kevin. You keep talking about it. If it breaks out this way, go with it. If it goes this way, it's going to 0. I will get rid of you. All right. And we're coming to the end here. Platinum. All right. I talked about $100 move in platinum. Got a whopping $50 out of it. Okay. Brings me back. Okay. So I talked about the backhoe in the last video where the guy backhoed, I think it was the Merc, and the water came in and screwed up the computers, and all the markets turned because the participants all got funked. They lost their rhythm, their mojo. They lost it, kind of like when we had the tsunami in Japan. It kind of, markets are going one way and then bloop, went the other way. And you get into the swing and the rhythm of things, right? So here you have metals coming down with the dollar. Okay, so the correlation's pretty high and stuff. But what I'm noticing is that the stocks are holding up. So I'm trying to figure, you know, usually the stocks lead the metal. Okay, you know, those on the inside know what they're getting further. You know, I know a secret kind of thing. It shows up in the marketplace. It's like basis. Okay, how much the cash price is versus the futures price. And things will spread, okay. So I'm not quite sure what the deal is with gold, but like I said before, is if bonds debt, we do some shakeout there, we may get some short-term trend changes here. I know I am bearish on gold kind of thing for a while. But it's one of those, you kind of look at it, because every once in a while, you know, I get people who email me who need to be dug out of something, and it's like, well, okay, well, let me see what I can do here. You know, here's an opportunity to get out. Here's an opportunity to get out. Here's, you know, but it's kind of like if it's lopsided one way, you can get a persistent trend. Okay, so I'm not saying that, you know, gold's going to turn and go to $1,500, you know, but we've seen some pretty wide swings. You know, like today's action, we saw, you know, it's you know, I talk about, you know, in the olden days, if oil was up, gold would be up, right? Okay, we're not getting that. So that's under that something else is going on underneath. We know that the commitment traders are slanted bullish, and it's not working for them. And the dollar and everything, you know, it's kind of like the dollar's stronger and oil's up, you know, so a double whammy out there. But, you know, we may get some sort of short-term deal. The other thing too is it's how it's spun. We're raising interest rates because of inflation, and they may spin that on the gold deal. But I noticed, like the money flow into silver is hanging on there, and I'll do that on the next video. And that, but here you have where it bounced up and platinum came back down. Now we're getting the hooking action here, and this on a weekly basis. So this is our first move up for this year, basically. And we've come back down. So we made, at best, I'll say that we just basically go sideways, just a larger sideways range here. But it's one of those that, this is nice and easy. And now you're getting wide bars and all this stuff. So you may get some sort of intermediate type move here, counter trend. Something that the cocoa people are looking for. So, we got a decent move up today, but you had to go through Friday first. I played cocoa under I think around between $800 and $900, and we're at 22, and I think high is like 36 or something. So hey, look, cocoa's coming down, which means my candy bars are going to get bigger, right? To me, it's just basically a bear market. You're looking for some sort of rally in cocoa and have it continue lower. But for right now, there's definitely going to be a bounce here. We've had, you drop 100 and up 100 when the thing only moves plus or minus, 20, 30, $40 a day, if even that. Cocoa sub-index, basically the same thing. VXX here, so you're coming down, so you're getting the hook thing here too. So we're back to the old stock market thing. I have to go back and take, it's not that it's not that I don't like the Donald or anything like. I go with whatever's, but it's kind of like when you're sitting at the table playing poker or you're handicapping horses. What do I have? What do I work with? What did he said something, and China fell up. One index fell 5% and the other one fell 2.5% or something. Okay, take your 2250 on your S&P and multiply that by 0.05 and go, wow, somebody said something and it drops 110, 120 points. That's what we're going to have to deal with. Now, I will, because that's a heck of a lot of uncertainty, I usually leave that slanted towards the bulls, because the humans, they're uncertain, so they don't do anything. And there's there's an underlying push underneath the whole system, right? We need 3% inflation, so spread that out over a year and put that into stock prices, kind of thing, So if nobody does anything, the market goes up, that kind of deal. To sell the stock, you have to charge more, right? It's kind of like if Dillard's was going to have a 100% markup sale, no one would come. Dillard's has a half-off sale. Everyone would come, but in the stock market's different. You mark it up 400%, they want it. Some, like today, there was one that went from 50 to 5, 70 to 5, and they wanted it. Don't work that way in my book. That's why I like commodities. If all else fails, I own pork bellies. No, it's settled in cash. So, we're getting to deal with the double hook down here. It's precipitous decline. These are logged charts, so that there's a lot natural flow to it. And now the angle of descent is increasing, so we're out of trend per se. So we're on a different trajectory. Yes. So there's it's kind of like oil today, and what I talked about in the last video. This morning we woke up and you thought, sure as hell, I got to get into oil. It's a given. And I talked in the last video about that same mentality going into FOMC, and it's going to be a given. Bond prices are going to continue to tumble. And then you go and look at the stock market, and it does the exact same thing. a persistent trend at an acute angle. Yes, sharp, and yet you want to fade it. Okay, so half the country has this hope thing going on. We've had a pretty good move, but at the same time, they also got really giddy, in my eyes, at a period of, it's outside of the norm per se. This all walked down nicely. See how just the distance between the moving averages and stuff, and now it's just a wee bit, a little bit too far on that one here. And if I said, hey, you need to buy VIX, no one's going to go after it, right? They've heard that all the way. They've heard that from 2011. It hasn't worked. How many billions of times? What does this one say? 3,168. I mean, you average down up here at 2011. Oh, I miss you at $5. XIV. All right, same type deal. Same type. You average down, average down, average down, average. You're going to need this thing to go up here, and you can figure out the math on that one. So the deal is that this is an outlier. We're off the beaten path. Something fierce. I'm not. But we also have things like the NASDAQ that can't. So you're going to tell me that some sort of ABC company you've never heard of is better than Amazon or Google or Apple or what? You know what I'm saying? It's the quality of the stuff that they're chasing after isn't the best. They're going to whatever du jour. They're behaving erratically. Some people are getting frustrated. The toughest ones are the ones that try to go against it. My thing is I have to kind of look at this and go, okay, I mentioned in 1968 that Nixon wasn't even they didn't even make it to inauguration before they dropped stocks 30%. And the thing is that that whole psychology of what you thought of oil, or you thought of this, that, and the other thing. It's the same thing here. If Trump or somebody else decides to drop the ball, there's a lot of psychology in the up movement that we've seen in equities post-election. And I also pointed out that there's a lot of call buyers that went on to frothiness. And, that's the thing with the mid on the VIX. It's one of those where, if people are buying distant calls because of, they're stretching it a little bit. That's all it takes. You have all that psychology that's all slanted. You have the ones that are disbelief that want to short it, and it just continues to go up, kind of thing. And then you have those that believe it, kind of like oil today, but all it has to do is turn, right? And you now, we retested on the S&P. Where am I at here? Am I almost done? Energy sub-index. That does look like a sideways action here. Let me finish these up. Metals. All right, you're banging off of this. Industrial metals. Okay, so you're the copper, nickel, and stuff on here too. So you're banging. All right, and then JGT. You're pulling back. Tin. We'll pass. Buy right index call. Whopping 100. 2011. So 42 to 70. Do you do anything with this call index? Like pay out any of that money? No. Whoopsie. Okay, what is this one? Okay, this is only 100 shares. All right, this is the first interest rate hike. This is Brexit. Or no, this is China. Hold it, Brexit didn't even show up on here. All right, and then this is the tail end of the first interest rate hike. All right, and what are you back here? What happened back in here? I have to go back and look at that. What was that? Do we have that now on the buy right? It should be in here, right? Yeah. Buy right index. All that froth should be in here. Why is it not in here like here and here? What's this? This is April. Okay, so why isn't it in here? And the fact we're getting divergence underneath here. Oh. Wow. So it only took me 100 shares to figure out that something's not right here. This S&P goes straight up, and this is a buy the underline and write the options, and they're not getting anything. You're not getting the spike here, which logically you would. Oh, very interesting. British pound. Any weakness, buy it. I think it's going to go to 133, 135 now. Yeah, the commitment of traders is slanted to the dollar. I think we're really going to shake the tree here. We're going to get a good, decent move in bonds back the other way, or the dollar is going to come off, which would mean gold goes up, and then this is carbon ETN. Cute, and actually, it's holding up there. Just for fun and games. I'm just talking to myself. Yeah, but Kev, we're listening to it. Get on track, buddy. Try to keep them down to 20 minutes. I loved it when you used to do 5-minute videos. One guy's going, he actually would do a 5-minute video? All right. All right. We'll do this one real quick. Okay, so here's our S&P on a weekly basis. This is 2012 bottom here. You can see the unbalanced volume is at the low end, right? You have it move all the way up, so it's there. This is it is logged, right? Logged. So this, draw your trend line this way, draw your trend line. But what I wanted to point out was, I think it works better on the S&P, right? All right. Okay, that one works. All right. So what I have going on here is this is usually how it goes. Okay. You have some people who buy the breakout, and you have some people who sell the breakout. Okay. So you come down here and it reverses. Okay. Here was the high. Okay. Comes up here, pokes through it, and it pauses. Okay. This is the pause, right? Okay. Continues higher, comes back, retests the area again to see if it holds, right? And it holds, and it's off and running. Large volume. We know, what do we know? We know there are a lot of bodies in this area. We run up. Sunday night, they move up to the upper range on the futures, and then they reverse. Here we have it again. So here's the deal on this one. Basically, this is S&P here, but it broke out. It needs to hold 2180 on the S&P. Okay, I will give it that it drops and retests it and comes up, but what I'm looking for here, right? You see all of these little 2-hour bars. This is all through September. This is all through October. This is all through November. This is we drop 700 points overnight, and then we move, right? Bars get a little more confident, a little more smaller bars, smaller bars, smaller bars. And all of a sudden the bars get fat. Bodies have just came on board. And then we open up, just like what we saw with oil, open at the high and trade lower, right? So we have FOMC. I wrote, I think this morning, 2280. Okay, now we're at that. I almost said at the end of the move, but I'll treat it as an end of the move here. All right. You do get the volatility, right? Okay. So what I'm saying is that if you do come in here and short it, the herd's going to see, they're going to go at 2280. That's what we're going to aim for with the FOMC. I'll have to say, I have to put that into my, that this is my risk level kind of thing, right? But on the flip side of it, here's pivot, and this is going to uh, for the so 2240. So what I'm getting, you definitely know you're gonna get, if bonds move and gold move and the dollar moves, and these things are gonna move too. And what do we know? We know that la 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 la. Getting some volume. This was in the know. People were beginning to get there. This is where in the video I said hand Kevin the ball and he'll run with it. But down here, right down here, our signal was that there were too many put buyers before the election. Right? The video, the gap and go, that was what we know. Too many put buyers. But all I know is that as these bars get fatter, and this is on a 2-hour basis, right? 2 hours. We know the bodies are here. So what is the most pain? The most pain is to bring this thing back down. All right. And then then this is where things get a little more interesting. All right. We're at fresh highs. We poked up. Here's a little spinny top thing. Derbyshire, whatever. All right. Draw angles, your angle pretty, it doesn't mean we can't have something sideways like this. You run higher and then you do the sideways side, you consolidate, as they say. And then you see you tested it here, you tested it again, you kind of went down into the middle part here, you pressed your luck, you tested the breakout, you tried to go up, didn't make it, you tested it again, went lower, held, lower high, lower low, got about halfway through it, then you ran up here, and what do we know? We have a lot of people that are believers here. We still have to put the money into the system and get the contracts, and like I said, there's just like with today with oil, there's a lot of believers in here, right? There's a lot of people wearing t-shirts and hats and stuff, a lot of believers. We're raising interest rates to jam the economy. The stock market's been going up since 2009. We're working on an end game here. We're talking months here, not years, right? I talked about with the wheat deal. Anything gets out of hand. We have all kinds of different games. I mean, the thing is if the bonds go the other way and they start losing money by the thousands per contract, and they hit the panic button, and because you have people who have been pressing the gold button for the short side of stuff for a while, or the long side of stuff. They've been doing bonds. There's a lot of momentum in there that if you slap it, it goes the other way. If gold goes the other way and bonds go the other way and the dollar goes the other way, how do you know stocks don't go the other way either? I'm not saying that it will, because you know how much I love putting 4 different variables on a coin flip. But the deal is psychology, just like we talked just with the oil today. There's a lot of psychology in there, a lot of bars. Yes, it did break out. Yes, it did have the, the volume and everything pushing on it. But, the thing is this thing has to, I'll give it down to like 2180 kind of deal. But 2200's on here. I talked about, you can buy options out to 2019 on the put side. That's how you look. That's how I look at it. I look at it as, what is the opportunity? I mean, the puts I looked at with the Qs, we were just at that level down in here in the summertime, and I'm going to get X amount of years forward. That all it is it's not as much as speculation. It's just a hedge against your portfolio. I'm not calling it screaming top, even though pretty much post Brexit, I basically, said I don't like it, from the beginning of the year down here at 1800, where I said we'd get to 2400, and we got up to here at 22, and I said, well, that's enough for me. So, the trend lines are still there. The angle of ascent has kind of picked up just a skosh. You have, that's just that one. I can show you all the bad. Whoops, I can show you all the bad ones. The NASDAQ that was the leader is faltering. On a weekly, I said possibly shoulder, head, shoulder. I'm giving it the benefit of the doubt that this is a pause before it breaks higher. Okay, that's I have to go right. We've been going up. We go sideways. We're getting a series of higher lows here, higher low, higher low. The Dow swung, the Russell swung. Why isn't the NASDAQ swinging? That kind of thing. I got to give it the benefit of the doubt. Here this is a weekly. Amazing how it got up to the weekly installed. This is the Russell here. My deal is they have to hold the breakout. We traded for 1, 2, 3 years of basically sideways. We gave it the breakout. If it loses this, it's going to come back through the bottom. It's going to come through the bottom side of this because of this is a loss of the entire move. Okay, going back 7, 8 years. This is money goes into the system, the capital. We create wealth with it. We come up with all kinds of ingenious things. We do our deal. We bid up the stuff. Interest rates are low. We buy back stock. We take it out of we have this artificial shortage of equity out there. It's like kind of like with the bonds. The insurance companies and stuff they ran out of paper to buy, and then they ran into utilities, and what happened? It turned on them. And then you have Japan, and I won't go into that. Japan is nationalized. I mean, aren't they the largest ETF? They're the largest holder of stuff. It's almost like the planet is kind of, we're trying to hold the whole planet together here, which of course, remember, little textbooks don't go back that far. We don't have what happens when the planet, the whole big picture. I can go into other things like population and blah blah blah, but the deal is my worry about the whole thing is that this is all on hope. It mechanically, it does. I know it's on hope because I watched TV, but mechanically it traded sideways for a while. It coiled. It traded below it, got a springboard, sprung up here. The angle of ascent is just a wee bit sharp, but any loss on here, it's going to be a big loss because I look at this as any loss that's coming up is for the whole big picture here. All right. But I'm not saying that you can't do this and this. But this is a logged chart, hey? So this is like going to the moon, okay? All right. And I don't know how many of you have been around for 1987, but it had a sharp angle of ascent. Also, you can go look at from 1985 to 2000. Okay, how about, would you rather live the way up from 1995 to 2000, or would you rather go through on the downside again? So I'll leave you with that, and I'll do another video on the futures. Bye-bye.